Although the basic business model for Tether and Circle is similar, their approaches to implementing it are night and day. How they manage their reserves defines their essence, their risks, and their future. This is a battle of two ideologies, two visions for the future of money. Circle, USDC, the path of compliance and transparency. The strategy of Circle, founded in 2013 by Jeremy Allaire and Sean Neville, can be described by the motto, trust through transparency. Their goal is to become the stablecoin of choice for large institutional investors. And for that, crystal clarity and full regulatory compliance are essential. The clean reserve. USDC reserves are designed to be as simple and low risk as possible. They consist exclusively of cash and short-term US government obligations. A key element of their strategy is partnership with giants of traditional finance. BlackRock, the world's largest asset manager, which manages the majority of USDC's reserves through the special SEC-registered fund called the Circle Reserve Fund. BNI Mellon, America's oldest bank, which serves as a primary custodian or asset holder for this fund. The announcement of this partnership in March 2022 was a landmark event for the entire industry. The composition of the Circle Reserve Fund is public. It's mainly US Treasury securities and reverse purchase agreements collateralized by those same securities. In addition, Circle publishes monthly attestation reports from a Big Four auditing firm, Deloitte, which confirms the composition and sufficiency of the reserves. The near-death experience, the depegging due to SVB. Despite all this transparency and security, in March 2023, Circle experienced its worst nightmare. Silicon Valley Bank collapsed, and the company was forced to admit that 3.3 billion of its cash reserves were stuck in the failed bank. Panic gripped the market. Fear arose that Circle would not be able to honor all redemptions at the 1-to-1 peg. A massive sell-off of USDC began, causing its price to crash to 87 cents. It was a devastating blow to the reputation of the safest stablecoin. So how was the peg restored? The US government stepped in. It announced it would guarantee all deposits at SVB, which meant Circle would get its money back in full. It was this action, not any effort by Circle itself, that restored market confidence, and the price of USDC quickly returned to the dollar. This incident was a harsh lesson in counterparty risk. It showed that even the most conservative model can fail. Ironically, the connection to the traditional financial system, which was Circle's main advantage, also proved to be its critical vulnerability.